Well, season 3 of the Trading Bell has definitely brought you a lot of regional leaders. Last time we were talking to the Rwanda Securities Exchange CEO, and today I'm speaking to the Uganda Securities Exchange CEO, and that is Paul Bwiso. We're going to get right into the conversation about the USE and more, but first, take a look at his profile. Paul Bwiso is the Chief Executive Officer and has overseen the Exchange of Uganda for over 4 years, offering strategic guidance to the management team and successfully leading it through a corporate rebrand and restructuring and the demutualization process that has seen it transform into a public company. Paul has a wealth of experience spanning over 18 years and a vast exposure in financial management, business analysis, mergers and acquisitions, and regional capital market operations. Prior to joining the exchange, Paul was a general manager of Dyer and Blair Investment Bank Uganda office. Paul holds a Bachelor's of Commerce degree in accounting and has skills in valuation, business analysis, and wealth management. He sits on the board as an executive director and is a member of the Chartered Institute for Securities and Investment, London. All right, thank you so much, Paul, for making time for us today.
Yeah, you're welcome. Thank you for inviting me.
Amazing. So we do know that the USE was officially, of course, licensed in 1997. And in 2018, that was last year, we did see a rebrand of the Ugandan Stock Exchange. So what does that rebrand entail?
Well, we thought at the time that after 20 years of being in business, we needed to reinvent ourselves. And one of the things we realized was that the capital markets and the exchange in particular in Uganda was not well known. So we looked at changing the brand, but to create more awareness. So we invested quite a bit of money into the rebrand, but also reaching out to the public. We went onto radio, we're writing articles in the papers, but the objective was to be noticed and be heard, because the comments had been, the survey we had was that we were quite quiet and unknown, and people could not differentiate us between the Capital Markets Authority and the exchange. Okay. Yes.
So how have you seen the fruits of that particular campaign so far?
Yeah, I think the fruits have been very positive. We've been able to reach out to a new set of clients. I'll give an example. We had an IPO last year, and of the new investors, about 90% were new investors who actually advised us that because of our campaign and being out in the public eye, they actually thought that the stock market was an interesting thing, and that's why they participated in the market. The other thing we saw was that investors took our brand took a new look. Our catchphrase is actually inspiring growth. Now what that means is that we inspire growth in all sectors or all avenues of life. We want to inspire companies to raise capital, but also grow and give a return to their investors, but also provide services and products to the people. We've seen government get involved with us a lot more. There's more communication between us and the Ministry of Finance. We are involved in initiatives. So the brand actually, we got recognized out there, and we think we're on the right track.
Okay, amazing. Yes. And we were just talking a little bit before we started this, and you were telling me you have about 17 listed companies, and you have quite a few Kenyan companies that have cross-listed from the NSE. And the initial one was in 2001, Kenya Airways, and then, no, sorry, that was EABL was the first one. And then, of course, you had Kenya Airways in 2002. And since then, you've had a couple more as well. What sort of benefits do you see these cross-listings to have?
Well, I think at the time, the idea was to provide shareholding to local investors in Uganda for companies that did participate in the Ugandan market. If you look at most of the cross-listed companies, Equity Bank, KCB, EABL, they all have local presence in the country. I think where we did not benefit as an exchange and a market is that most of the cross-listed companies, I think with the exception of Centum, did not provide shareholding into the market. So it is more of showing a presence of their stock price on the Nairobi Stock Exchange, and then if investors want to participate locally, they're able to contact their local broker, the brokers in the Nairobi market, but also just to give the investors a presence of the pricing. So as an exchange and a market, we think we've actually been rethinking the whole idea. that what we're actually doing is more of advertising and not promoting liquidity. That was the original objective
Goal.
for that. Yeah.
Okay, so
Yes.
you need to take that a little bit further than, like you said.
Yes.
Okay.
Yeah, so the idea is to now encourage these companies to actually provide some shareholding. Now, one of the mechanisms we put in place, you know, Meme trades on the local bourse here,
Yes.
but also in the primary market. We put a mechanism between the two markets where you're able to move shareholding from the CSD in Uganda to the CSD at CDSC Kenya and back, to take advantage of not only consolidating your portfolio, but also taking advantage of arbitrage. And we've seen movements between both markets in a couple of millions of shares over the last 2-3 years.
Okay.
Yes.
Amazing. You know, let's talk a little bit about the East African Securities Exchange Association as well, because your Rwandan counterpart had, of course, also elaborated on that previously with the trading bell, talking about how it's a way for all the security exchanges within the region, East African region, to come together and then collaborate. So what do you think is, you know, the way forward for it to be able to even deepen that sort of collaboration, as we were also just talking about that?
Yeah. Well, the association is really partnerships of us coming together, or the different stock exchanges coming together to work towards harmonizing. I mean, we all know about setting up the East African Community, one market, monetary policy coming in 2024. So what we are doing internally is to make sure that securities are tradable across the markets and access to capital, but also to investment options is brought across the market. East African Community. One of the things we've done, or we did this year, was we came up with the East African Capital Markets Day, and this was in Rwanda earlier this year. I think it was on 27th of May.
Okay.
Yeah. So what transpired at that is that we had conversations, invited different stakeholders within the capital markets industry, and these were able to talk about sensitive issues, things to do with liquidity, things to do with SMEs financing, things to do with raising capital for government and these large infrastructure projects that are ongoing. So what this has been able to do is get new ideas put on the table, but also create more collaboration. Because as an association, we meet twice a year, but we also have technical committees that come together and address different issues that have been raised. So we have a committee dealing with technology, we have a committee dealing with liquidity and access to capital for SMEs. And I think all these innovations that you've seen, say the next derivatives market, and were discussed or originated in some of these meetings. And we would like to congratulate NSE on this milestone.
Absolutely, the next derivatives market that was, of course, recently launched. Is Uganda very far from also having a derivatives market option?
It's something we've considered, but if you'd say 3 to 4 years is far, wouldn't think that would be the case. So one of the things we've done as the Uganda Securities Exchange is look at diversifying our products. We've been an equities and bonds market for the last 20 years, but the equity space has been quite challenging over the last 4 or 5 years, with a lot of private equity coming in, banks reinventing themselves and lending at lower rates, with DFIDs giving concessional money to companies in particular sectors, especially agriculture. So attracting businesses, and maybe just to add, the family businesses in East Africa are quite many, and they're the majority of companies.
Yes.
And those are not really keen on coming to the market without really the sufficient education. So as a market, we looked at the different options, and we opted to set up a spot commodities market.
Okay.
We're currently in the process, and we've submitted our application to the Capital Markets Authority in Uganda for a license to operate a commodities exchange. We believe that by understanding the commodity spot market, we can then move to the derivatives market, because we'd have an underlying product to work with. Why we're unable to do it with equities is that our market is quite illiquid. We have quite a number of large pension funds that hold long term, so we Once the IPOs, we don't see a lot of trades happening thereafter because the pension funds mop up and hold. So in terms of average trades, I'll give an example. This year so far, 91% of the transactions have been foreign institutions on the market.
Okay.
Yes. Yeah, so we believe that the commodities market will play a big role. We are big on agriculture in Uganda. We've got all sorts of, I would say, products for export, local. We're big in maize, grains, sesame, sorghum, paddy rice. So we've worked on the details, put in place the standards. We've got the technology already, and what we're waiting for is to address one or two issues with the authority, and also work with the warehouse receipting authority to put in place certain requirements. The beauty about it is that we've had a Warehouse Receipting Act since 2007 and regulations, and we thought that this was space that would easily venture into.
So it's a very exciting development, and we're looking forward to seeing how that goes even further. But even like you mentioned, a lot of the larger companies within the region are family owned, and so that private equity, sort of standpoint still stands very strongly, as opposed to them being able to invite shareholders into having a chunk of the company. What is one way that is able to convince them most likely to be able to open up?
I think there are many factors that we need to address, some systemic, because the companies need to be aware of the benefits of equity versus debt versus raising money from private equity, the different sources of capital. Now, the risk is not really in the family diluting.
Yeah.
It's about more of operational control. Because I think that's where they believe they would lose touch. Because when you have an effective audit committee, it puts in check all those ownership controls of, I think I recall there was an investor who told us that his mother would generally just walk into the business and ask for cash from the accountant and leave, and said, would that be able to continue? And of course we said no. So he started changing his mind about that. So it's more of the operational control. Some of these companies are actually good. They file their taxes, they've got their books in order, they've got good advisors at the board, and they're quite ready. But it is moving to that step of, hey, you're not losing control, but you just have more investors to give back to, and to also share with the community you're working with in terms of investors. So we at the exchange have been speaking to companies. We actually usually have on a monthly basis some sessions where we call maybe one or two investors with their financial advisors, accountants and directors, and we take them through what the process is. And we advise them that the difficult part is the early days. After a year of being on the market, the rest of it is pretty straightforward. You know what the obligations are and what you need to do to keep your investors informed, because the capital markets or the stock exchange is really about disclosures.
Absolutely.
Once you put out your information, the rest is for your business to grow, for you to work on your business and grow it.
So it's also that corporate governance angle together with the control that plays into that particular aspect. But even as we wrap up, some of your future ambitions for the USE for the rest of the year that you would like to share with us?
Yes. We have been working on trying to provide a solution to our investors to be able to deposit money seamlessly through their funds. So we're working on both a USSD and the app solution to move money, and we hope that later next year we should be able to upgrade that to enable them to place orders. Digitally. Yeah, so that's one. We have a potential issuer we're working with. We don't know how far, whether it will be later this year, but that is keeping us busy. The other is we are working with the Ministry of Finance to discuss potential tax incentives and solutions to attract companies to the market, and continue with our project on commodities, which we think has a lot of potential, considering the challenges commodities exchanges and markets have had in East Africa
Absolutely.
and Africa at large. Yeah.
Yes. Well, thank you so much for speaking to us and for giving us so much insight into the USE and more.
All right. You're welcome. Thank you for inviting me.
All right.
Yes, yeah.
Well, on that note, we'll get right into the market analysis. Stay with us. You know what that means? The markets have closed and we want to take a look at the numbers and figures coming out of the bourse this week compared to last. So joining me is Elizabeth Wangeshi. She is the head of research at NIC Securities and she's going to break it down for us. Thank you for joining us.
Thank you for hosting me.
Perfect. So let's dive right into the NSE 20 share index because we've seen quite a dip, 2.37%.
Yeah.
Why?
So wow, it's been an interesting week regarding how the market has been behaving. I would say it's because of a number of issues. First of all, we saw on Monday the trade tensions between US and China escalated,
Yes.
Forcing China to devalue their currency. So what happened is most investors now sold off their stocks to invest in now more safer assets like gold and other commodities. And you know, our market is controlled mostly by foreign investors. They account to roughly about 70% participation. So once that came off a little bit, even our market has also been declining. So it trickled down to our NSE market. The other thing is on the corporate earnings. This month is where most companies announced their half-year 2019 results. So most investors are also reacting based on how the companies are performing and are now selling based on how the fundamentals look like. So there are a number of also other couple factors that are also causing the index to decline.
Okay, and I think
Yes.
one of the other things we saw recently was the CBK also intervened when it came to the currency and the dollar to shilling rate.
Yes.
So does that also, you think, have an impact?
A bit of slight impact, I would say so, because also most of our debt is in foreign denomination. So that also affects it, but not directly to the stock market.
Okay.
Yes.
All right, so let's move
Yeah.
away from the index a little bit to our top movers. And it's very rare that Safaricom is trumped as a mover. But we are seeing a cooperative bank, they're moving volumes of about 4.4 million.
Yes.
Safaricom does come in next at about 2.8 million. So why do you think it has shot up so much?
I would start maybe with Safaricom, why it's the second move of the week so far. When we saw the trade tensions escalating, most foreign investors were on the selling position. But towards the end of this week, we've seen now a buying interest on Safaricom. And you know, Safaricom accounts for about over 40% of the market capitalization.
True.
On the other hand, our cooperative, the story is quite good. The price has really been discounted over time. So the price has even gone to lows of 12 shillings. So I'm sure now investors are now trying to just increase their stake on the company because of how it's been undervalued. And also they have a good story if you look at how they're trying to be aggressive in growing their revenues on the non-funded income side because of the interest rate cap, which is now curtailing their growth on the top line. Yes.
Okay, very interesting there. But let's take a look at our gainers. We're seeing EA Cables Limited. It's quite a shot up, actually, 21.65%.
Yes. So it's been an interesting company also, looking at the recent news that they issued about their debt restructuring. So we've seen a bit of renewed interest in the company over the few weeks. They also released impressive results, I would say, where they had a loss of about 303 million the previous year, that is 2018. But in the first half of 2019, they've been able to make a profit of about 630. And when you look at how the operating profit has also shifted from a loss now to a profit, is also a plus for them. So key things that also investors are also keen on is now the benefit of the debt restructuring, which now reduces the interest payments that they've been paying on the debt. The other aspect is they're also trying to improve their products, also increasing their distribution across the market.
Okay.
Yeah, so it's a nice story, and most investors are now trying to add up on the company, and now that the fundamentals will look good in the next years to come.
So it's a strong position then.
Yes. Yes.
But if we look at our losers on the opposite end of the spectrum, Kenya Ray, they're dropping 18.78%.
Yes. Well, Kenya Re is more of a market reaction.
Yeah.
They also released their results a week ago. The results were not impressive. They had a 12.5 decline in the net income. If you look at why they had that decline in the net income, is the claims, which claims is more like expenses,
Yeah.
they grew faster than the premiums. So claims grew by about 49%, and then the premiums grew by about 39%. So you see, you're making, yes, you're growing your premiums, but the expenses are outweighing your...
So you're not retaining as much.
Yes. So now, of course, now investors react to such news, but if you look at it on the long-term perspective, Kenya Re is still in a good position for long-term investors because of how it's been undervalued over time. If you look at the price-to-book ratio and also how they're trying to improve on their strategy, growing in other markets. The contribution right now, if you look at Kenya, the revenue coming from Kenya is 50%, and outside Kenya it's about 50%. So that strategy of trying to grow in other markets is a plus for them.
So it's
and
diversifying.
Diversification, and the fact that they're a reinsurance company, there is that mandatory cessation that they get from all insurance companies. It's a plus for them.
Okay.
Yeah.
So they're still doing just
They're
fine.
still doing just fine, yes.
All right.
Yeah.
And another one of our losers that we noted was TransCentury there. It's gone down by about 14.29%.
I think that is more of speculative, speculators in the company. Most of the companies there on the losing side is more shareholders reacting to recent news. For TransCentury, it's been that way for a couple of weeks. They've been struggling in terms of numbers, but as I mentioned on how, like, for example, East Africa Cables is re-strategizing even for TransCentury. It might look like a long-term plan, but well, it will pay off in the long term. So right now that decline, it's more of investors just trying to balance their portfolios also.
Okay.
Yes.
All right. Thank you so much, Wangeshi, for that. Definitely a lot of insights coming in from Wangeshi, because when you look at the numbers, there's so many factors behind it. But for now, let's take a look at Markets 101. Let's get right into our question of the day. Of course, you can also tweet it to us. And this time around, Joshua is asking, how do I know when I need to sell off the shares of a certain company? So Wangeshi, I'm going to let you answer Joshua on that one.
Thank you, Joshua, for the question. I would look at three things when I want to sell off my shares. First, the fundamental story of the company. Is it strong? Is it sustainable in the longer term? In that sense, I would know if the company will be giving me profits in terms of dividends. Secondly, I would sell the shares if I've gained a certain percentage. So the benefit of investing in shares is that there is always a point where you've accumulated, say, a 20% gain or a 30% gain. At that point, you can sell it and then come back to the market and buy again. The third reason I would sell a company is if the share price has been declining at a faster rate, then I would want to exit and then later on come when the company has stabilized. Thank you.
All right, there you have it, Joshua. Hoping that helped you become a smarter investor. For now, though, let's take a look at our NSE historical facts. And with that little fact, it's time for us to bring this episode of Trading Bell to a close. Wangeshi, thank you for all your insights, all the knowledge, and pleasure to have you.
Thank you for hosting me again.
All right. Yes. Now, with that, I want to, of course, bring this episode to a close. We were talking to Paul Bwiso, who is the CEO of the Ugandan Stock Exchange earlier on in the episode, and a lot of insights came in from him. But remember, next time on the Trading Bell, we'll have another exciting chat for you and the usual market analysis and so much more. So we'll catch you next time, and keep up with us on our social media handles appearing on your screen. I'm Maalika, Kazia. Bye.